All right, welcome to Forex.Today, where you have at least a dozen trading ideas every single day. However, in regards to this live webinar, let me remind you that trading Forex is risky and not appropriate for everyone. Past performance, good or bad, is not indicative of future results. You are risk losing all the money in your trading account. Therefore, hey, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, by the way, happy Health and Sports Day. Yep, Health and Sports Day in Japan. Hey, if that means I don't have to go to work, it sounds like a good one to me. In Canada, my home and native land, it's Thanksgiving, so Thanksgiving, Ma. And here in the United States of America, it's an interesting holiday. The banks are closed, but the markets are open. And that may be the only holiday that occurs. So we'll keep it short this morning because the markets don't tend to move if the money is locked up. So like the bond market doesn't tend to move when the banks are closed, for example. So we'll bear that in mind. But good opportunity to look at the calendar, plan out our week. It's also a good opportunity to look at Commitment of Traders report. It's a good opportunity to gather as a group of good-looking, intelligent people. It's a rarity, so we got to band together. And that's that. By the way, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that offers traders access to Forex in an ECN model, which means they're not taking the other side of the trade. They're not betting against you. They're passing you directly into the interbanking system. Cool. But you can also trade energies, metals, and indices, and hedge or scalp with binary options. The full package, the complete deal, the full meal deal for currency traders. So hey, tell you what, if these strategy sessions are helping you develop skills or gain confidence, and you are ready to trade real money, we hope that by TradersWay investing into your success now, that later when you do have the skills and confidence to trade real money, you'll choose us as your broker, as your trading partner for the rest of your successful trading career. Is that a deal? Seems intelligent. I was just going to share the secret business model with you. We invest into your success now, and then when you are successful, you'll pay it back in the future. Cool, huh? Hey, and how's it going? Is anyone finding increased success rates or decreased failure rates, which sometimes is the beginning of the success, right? Grace has opened a live account but doesn't know how to use MT4. All right, well, that's part of being here every morning. Marina's doing better. Right on. Anybody else? Yeah? Much better since coming to the webinars. Right on. Good. Sam says he found what he did completely, totally wrong, and fixed it. Right on. I mean, that's the whole the whole reason for us to get together as a team. That's really cool. Seems improved greatly. Kareem's improved greatly. Ahmad, yep, I begin to not lose. Right on. Well, that's the start, isn't it? That's really cool. Well, a couple of things here, guys. if you go to our YouTube channel, so you can just go to youtube.com and click on or do a search for Forex.Today. You'll be able to find our channel. And subscribe, please. When we get enough subscribers, then YouTube will allow us to have a custom channel. So eventually this will become like youtube.com/Forex.Today. So if you could do that, that would be helpful. You can also see here that I have people leaving questions and stuff. I generally respond to them. So if you ask a question on YouTube, I try to respond. The best way, however, to stay in contact is to go to Forex.Today. So every single day I upload a recording of these seminars, these webinars. The most current one is right at the top of the homepage, and then an archive of previous ones are in here. Okay. Plus, you'll notice at least a dozen trading ideas every single day posted here by our technical analyst team that cover all the different various currency pairs. So it's all there for you. In fact, let me show you something. If you register at Forex.Today like I have here, so you can see I have uploaded an avatar and all that kind of stuff. One of the major benefits is that, check this out, you're able to collaborate with your other traders in the community. Hi guys, the webinar has started. Oops. Okay. Nice, huh? So please go ahead and register. We'd like to have you part of our team. All right, so let's just go online here. Beep. 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 So let's start with, let's go to news and calendar. And I'm going to filter this out. Let's do 2 and 3 star. Okay, now today it's a pretty quiet day in the markets globally. So all the central bankers go to their little meetings. So somewhere there's like a group of rich people sitting around a table eating a cheap pasta dinner and boxed wine and paying a lot of money for it. And then some important dude is up front speaking. So anyways, we have Dennis Lockhart speaking today. Wheel speaks today. Evans speaks today, right? Pelosi is speaking today, right? Reinhardt speaks today. Just you could spend the day just doing some research and finding out what these people are speaking about. Couple of questions, right? When is the U.S. going to raise interest rates? When is the UK going to raise interest rates? And how bad is it in Canada right now? And then the Bank of Japan releases some meeting minutes. I mean, just holy smokes, eh? Lots and lots of fundies that you could do today. Now we have the big question mark here. What's going on with Japan? Are they going to add to quantitative easing? Kuroda said earlier today, which would have been yesterday for some, that there's no need to. Remember, I guessed a month and a half ago that at the end of October, Japan would shock the world and increase the rate of quantitative easing. So to kind of like ruin it for everybody, this is what he said today. I'll type it in the chat here. Did not see immediate need for stimulus expansion. Shoot. Well, that's the whole thing I'm guessing on. So that could delay some yen weakness. You see? So if you spent the day, let's say, selling yen and it didn't get weak, well, maybe that's what's going on. Okay? Literally, like if you've been, let's say, buying CAD yen for 4 days and you're making a ton of money and you did it today and it didn't work out, well, maybe it's because of that. Okay? All right, UK CPI, I think is going to start to matter more than it has recently. Retail sales, I think, will matter more than recently, only because, you know, I believe in, I believe the children are our future. There we go. I believe that the data is going to slowly improve out of the UK, not because of short-term, you know, short-run data, but the longer-run data from last year and all this kind of stuff. So anyways, I think we're getting closer within the next 6 months of the UK actually raising interest rates, assuming that the Fed's going to raise interest rates. So I think this is going to matter more and more to the market. Where before, you know, I don't know, it's just too early. Now, you know, I don't know, maybe in the next 6 months, right? So let's pay attention. All of a sudden, there's highlighted interest in what this information is, and obviously, good is going to be good, and bad is going to be bad. Okay, German zoo, German sentiment cares. Why? The ECB is doing quantitative easing. Yeah, it's starting to show the earliest green shoots, but they're going to keep doing it at any rate for over a year, so it's not going to change anything either way. Okay. Okay, out of China, Chinese CPI. Are we interested in Chinese inflation data? We had CPI and PPI. Should we care about such things? Yeah, probably, huh? So let's pay attention to that. And let's say the numbers come out better than expected. What do you buy? Aussie? Who cares, Sam? Sam says, is it manipulated anyways? Doesn't matter. The data's the data. If it's reported that, that's it. It doesn't matter. It's still going to move the market one way or the other. The truth is the price. The only truth is the price. Okay, so Aussie, but how about CAD? How about Kiwi? How about Noki? Right? The Kron. So on and so forth. Maybe sell the Japanese yen. So on and so forth. Okay? So it's just, you know, keep your eyes open for that. UK unemployment, all of this is getting very interesting, right? Average earnings. Now this is interesting too, right? Because we want to see, what, GDP improve out of the UK? That would be an overall picture of the UK economy improving, and inflation is a friend of output, isn't it? So if you're changing your future expectations for inflation in the UK, you would look at output, right? You guys following me so far? Okay. And there's 3 types of spending that can happen in the economy. Does anybody know what they would be? Government, yes. Consumers, Yes? And businesses, thank you. Right. Government can spend, right? Businesses can spend and consumers can spend. So in this case, if average earnings are going up, if wages are going up in the UK, perhaps they'll spend that. Because we know if you're not earning money and you're earning less money than you used to, you're probably not going out and spending it, right? So spending has to do with income. So increased income, so you have a job and you're making more money than you used to, eventually you start to feel confident and eventually you go out and you buy that 65-inch TV to hang on your wall. And what's actually happening is, you know, because of your purchasing power of your money, you're buying from someone else, and whatever. It's all good. Whatever. It's all good. You make more money. That's good news, right? So how about this? You make more money. You go to the store. You buy a TV, and that creates output. Right? Gets recorded in GDP. Another way of looking at it, if the government spends more, maybe through stimulus, they want to build some roads, they want to build some subway stations, they want to build a bridge to nowhere. I heard, you know, in the Great Depression, what America did was they hired their own citizens to do things like build post offices. They did things like they hired people to dig ditches, and then they hired other people to fill the ditches in. Just anything, right? Just hire people to do anything, but make them work, give them money, and then the things, right? I heard in the UK, one of the things they would do is they'd hire people, and they'd take a giant box of nails and screws of different sizes, and just spill them on the floor and say, sort them. Nice. I think I'd rather dig the ditches, huh? But anyways, yeah, so if the government spends more on bridges, GDP should go up because government spending, is a component of GDP, right? Businesses, when they spend, what do they buy? They buy like machinery for their factories, right? Capital good purchases. And consumers, what do they spend? They spend their money on TVs. So if any of those components go up, GDP goes up, and at some point inflation goes up, and at some point interest rates go up. And at some point the value of the currency goes up, so now you have the appreciation of the currency, which means the purchasing power parity relative to other currencies globally gives you an advantage, and now your British pound, if you're in the UK, makes Chinese TVs seem cheaper. Okay? And then now you get the whole foreign exchange stuff going on. Anyways, let's get back to it. Retail sales, okay, fine. PPI of the US, fine. Beige Book. Is anyone going to actually read Beige Book? There is an interesting challenge for the week. The Beige Book is the only report published for the public to read. There's a blue book and a green book too that gets published, but it's only shuffled around the other members of the FOMC. And I suppose the other all members of, let's say, the FOMC. Okay, that's fine. All presidents, I'm sure, would get them. But, you know, we only get to see the beige book. But the beige book, very quickly, what happens is a local president of one of the central banks here in the United States. So the central banks, the United States has many central banks. All right, part of the Federal Reserve banking system. So the United States doesn't have one central bank, it has many, a dozen. So what happens is the president of, I don't know, the San Francisco Fed goes out and talks to all the business leaders in the area. Because the problem with collecting data is what? It's already happened. So if all you did was look at the statistics, you're always backward looking. It's like always relying on technical analysis, but never doing any fundamental, right? You're always looking at what happened, not what's going to happen. So the president, besides sending out his PhDs to collect data, the president of each Fed, and so in this case the San Francisco Fed, would sit down with leaders in the California and Seattle area and all that kind of stuff, maybe even LA, and sit down and talk with these business leaders and say, well, how are things going? How do you think things will be in the future? Are you thinking about hiring people? Are you thinking about building that factory? Just tell me what's going on, bro. Okay, and they collect that data. And so imagine that data is being collected all around the United States. And that gets compiled and published in a book that has a beige color cover on it. And they call that the beige book. That's what happens when you put PhDs in charge. So anyways, yeah, so you might want to read the beige book. Could be interesting. You might learn something. Okay. And Aussie Jobs, great. I would trade that. It's one of my favorites. Okay, Chinese GDP. Yeah, could be important. Hey, industrial production. Yep, could be important. Right? I mean, what else do you need, right? So you can see right off the bat that's going to be a great day to trade the Asian session. Later that day, CPI, a high number, is going to just absolutely force the Fed to have to raise interest rates. Philly, let's go to page 2. All right, so Kiwi news and RBA news the following day. Yep, another good Asian session to trade. Can't quite see the Eurozone CPI, who cares, right? Again, because we know there's not going to be a change in policy. So you have to separate news from central banking data. So very often I don't care about the news unless the news will impact central banking data or potential policy change. That's all I care about. So if the policy is not going to change at all, no matter what happens, then the news is just irrelevant. This is something that, you know, new traders just don't grasp for a while or never really told. So like maybe next year, this same news will have much more importance, because next year we'll be talking about when will the ECB stop quantitative easing. Well, right now they said 2017, so like, what do I care about this year or even next year? But maybe this time next year we're talking about when are they going to end QE? Is it first quarter, second quarter, third quarter of 2017? You know, what's the data? So we would look at this next year. But this year I'm like, not interested. And remember, you see the euro going up now, right? So you're like, Wayne, but this is euro stuff, and euro's going up, euro's going up. Well, is it? This is why we need to check the Commitment of Traders report. It might not be going up. It might just be the US dollar going down. Because it's all relative, my friend. Okay. And industrial production, consumer sentiment of the U.S., Canadian manufacturing data, and foreign security purchases. Was negative 10, but now they're expecting plus 2. Seems like an opportunity to be wrong. All right, well, you know, do your job, pay attention. Okay, so that's the calendar this week. Let's do the COT, double D. Gotta have a sip of coffee first. The minions got it right today. All right, so let's see what's going on here. Net change in euro. Well, one problem you can see here, if you're looking at the Euro USD red line here, this is price. There hasn't been a change in price reflected in this data. Okay, so we might have to, if the Japanese government reduces corporate tax, will it affect the yen? Sure. So if Japanese businesses are taxed less, they become more profitable. And if they're more profitable, they could do what? They can maybe invest it somewhere, because it's like more income, right? They can invest it somewhere, or they could spend it. There's a difference between, you know, making an investment, which will have some sort of internal rate of return, or spend it, and they could spend it like pay their employees more money. And that's really what the Bank of Japan would want. They want to see wage growth. Because it's really difficult to have inflation without wage growth. Because of that increased income now on the consumer side, the employees have more income that may lead to more spending. Also, if Japanese business A raises their wages to their employees, then employees are going to want to work there more, right? So you can have a supply and demand curve for the employees, right? And therefore, if company B needs to hire people, but those potential workers would rather work at company A, well, then company B will probably have to raise their wages too to at least stay in equilibrium to attract those employees that they need. So they will have to raise their wage too, so on and so forth. Okay? But what if Japanese businesses pay less taxes, are more profitable, and they simply stick the money in the bank? Well, then maybe through financial intermediation, those banks find ways to put the money into the economy through loans. And we know that the fractional reserve banking system would then multiply that money by a magnitude. So if that meant a trillion extra yen, because the businesses are not giving the government the trillion yen, they stick the trillion yen into their bank and do nothing. The bank could possibly, potentially, if there's enough money demand, to put in 10 trillion yen into the economy through lending and all that kind of stuff, because banks are the ones that really create money. All right. So anyways, so this data might not go far enough back for our needs, okay, because we still have euro here at 111, and we're basically at 114 now, right? So, and I don't see the giant spike in price, so this data isn't quite new enough, okay? But what it does show is, you know, not much activity at all. Have to check that out later. All right, big dog. Again, flat. No change in the data. This is flat price. Okay. Net. It actually fell a little bit of net, so there's less traders in this trade. There's less people long and the same amount of people short. So bulls have gotten out, just slightly. Okay? You see that? Interesting, huh? Just a few less bulls, according to this. But again, nothing to make a stink about. Okay? Yen yen. Okay? Gray line, number of people long. Looks like actually just a tiny, tiny shade less people buying Japanese yen, but less people selling it. Again, old data already. Okay, let's take a look. Gray line, not many people buying it. Check this out though. Is this significant? Significantly, I guess once I say significantly, it makes it significant. Significantly less people short the Aussie dollar. Nobody's bought it. In fact, less people have bought it. But much more bears are out. So we've been watching now. This is showing, this is around 70. We're now at 70, not quite 74, 73 and a half. So we're up about 350 pips. And nobody has bought it, according to this. How interesting. At least at this time. So again, next week's data will be interesting. Kiwi. Look at the mass exodus out of Kiwi. Significantly less people long, significantly less people short. Market, almost neutral here. Which means, statistically speaking, there's the same amount of people long last week as there were traders short. So think of this, guys. If there was 1 million long positions, there's also 1 million short positions. So that'd be a big cautionary red flag, okay? Be careful of the Kiwi. How about kitty cat? Giant change in price. So what happened? Less people long and less people short. Huh. And a slight move toward neutrality. It's funny, this is not helpful. So I think most of these pairs need another week. I mean, remember, none of this is going to put you into a trade. What we're doing is trying to figure out what is moving the market. So, for example, the one thing that we learned on Aussie was Aussie dollar was going up last week, but the reason it was going up last week was traders that were short were taking profit. We don't know if that's still the case, but remember, these are reportable positions. These are institutional traders that are buying and selling large lot sizes. They're big traders with big positions. This is not an opinion survey. This is actual money in the market. Okay? And so we saw and have been witnessing a dramatic increase in the Australian dollar relative to the US dollar, for example. And one thing that we can tell based on facts now, not opinion, okay, I guess we'll go here. One of the things that we know for a fact is that when this process started to move up off of this 70 level, basically, right? You can see it's all here, nice little double bottom. It started, we don't know if it's still that way, but we know it started by traders getting out of the short position. See, actually less people were buying it. There's actually less bulls, but dramatically less bears. And that forces it up, at least in the beginning. So it'll be interesting to find out what happens again, next week. And what we might find is if no one is buying but price is going up, then maybe somebody, those original traders that were short and took profit, maybe they'll want to short again, I don't know, here. See what I mean? Because we know, based on their trading behavior, we know they're not bullish. They're just not bearish at 69.000. Right? At 70, right? At 0.7000, they're not bearish. But are they going to be bearish at 75? Well, that's the right question to be asking, isn't it? They were bearish. They're not bullish now. Will they be bearish again? And that, my friend, is not it is not backward looking, it's forward looking, isn't it? So if you're still a bear, you ask yourself, are you bear now? And you're like, well, maybe not at this level because we just made a higher high. Well, would you be interested in bearishness later? Joseph, yes, that's correct, sir. Yeah, all right, so then do you have to sell it now? No. But let's zoom in a little bit here. Okay, looking at this little retracement we had. What if today we got something like this? Then tomorrow, maybe you want to sell that. And kind of prepare like this. What if you start planning tomorrow's trade today? Now, why would, after this big bull run, why would this drop? What's the resistance? Well, we had a consolidation here before. Well, this is a little higher, and this is sort of where we are now, right? Somewhere up there, right? But what about a longer term chart? These institutional traders now, these guys, right? that have billions of dollars that want to sell Aussie again. Just think of it that way. Somebody has billions of dollars. They were short. They've cashed out at the end of the quarter. Remember, we talked about that. The end of the quarter, they cashed out at 70. They might have shorted at 80 or 90. Probably not 9 because that was last year. So 80. They sold at 80. They cashed out at 70. Okay? At the end of the quarter, they booked the profit. Great. This fades up for a while. When are, what kind of charts are these billion-dollar traders using? 15-minute charts? Hourly charts? Daily? And weekly. So let's look at it from their point of view. Where would they possibly short? Let's zoom in a little bit and say, well, I wonder what the weekly looks like. So weekly 21, right here. Okay. Kind of interesting, huh? And if this headed down now, then in the future this 55 would probably come down and tickle this anyway. So you have to ask yourself, is this going to head down or is it going to go up to the 55 and then head down? Okay. So it could do one or the other of this. Okay. Let's do it like this here. Aggressive bears, come on now, there we go. Aggressive bears are going to prepare to sell sometime this week. Remember, we're looking at weekly candles now. This doesn't mean today. It could be today. Could be Thursday. But we could wick here. We could do something like this, couldn't we? Look at this. We pierced through the 21, we wicked up, and then the following week, bearish engulfing candle. Following week, bearish engulfing candle. Consolidated for a month. Bearish, 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 bearish. Consolidated for a month. Bearish, bearish. Okay? So, interesting, right? So I think it'll either fall soon, meaning this week or next week. Or you can see here, this was a giant green candle at the beginning of the week. And at some time, probably closer to the end of the week, we had given some back. So there's been at least 1 or 2 red days here, followed by a 3rd red day, a 4th red day, a 5th red day, a 6th red day, a 7th red day, and an 8th red day. Followed by a 9th red day, a 10th day, 11th, 12th, and 13th red day. It's a lot of red days. So, maybe that's on its way now, right? So what, spike up to 75 and then drop like a ton of bricks? Could be a rabbit, could be. So therefore you want to look on the daily chart and look for signs of weakness. Well, it doesn't seem weak to me, right? Not at the moment. But that's how you put it together. And remember, this started with commitment of traders report. That even though it's older data, it's almost a week old, we know how this started, this trend. We know that what the downtrend was built on. Massive bearish forces, massive double bottom, and we know the rise started without the bulls. So it'd be interesting to see what happens next week and find out if bulls ever did enter this. If the bulls don't enter this, then at some point it's going to come down like I showed you before, and it could come down hard. It could go, let's say, how about this? Up to 75, down to 65? You see what I mean? It might take 3 months, but it's 1,000 pips. It's not impossible, it seems, right? It's not even implausible. Do we have any Australians in the room today? Aussie, Aussie, Aussie! You say that and every Australian just scrambles. And they're like, oh, oi, oi, oi! All right. So you tell me, does it feel like your Australian dollar could fall to 65? Or does that feel impossible to you? See, I'm not reading your newspapers every day. I'm not watching your news programs every day. I'm not talking to Aussies on the street. So you tell us, for the Aussies with boots on the ground, do Australians feel like this weakness can continue? Or are Australians walk around confident, like our government's got everything under control, and there's nothing but, nothing but awesome days ahead, right? So, anyways, it's within reason, at least based on current data. I think maybe that's what you need to decide, right? Yeah, got some fiscal problems, hey, Shawnee? So if there's risk in the government, do currencies like risk, or are they not like risk? See, here's the thing. If you lose your government, well, what kind of government is going to move in to the leadership role? Well, we don't really know. Well, and how will they govern in the future? What are their policies? How about this one? How about this one? This is great, right? How about voting for a prime minister that goes in and crushes the only part of the economy that's doing well? Has that ever been tested before in Australia? Let's find the one industry making money and let's crush it. Let's try to drive them out of business. Yeah, the Australians tried that one. And I don't think it was good economic policy. Yeah, exactly, the mining tax. Now, here's the interesting thing. When you have a government and it looks at, let's say, all the different industries in its economy and finds out that all the industries are weak except for that one, that mining industry is actually doing really strong. Well, what do? You increase their taxes? Why would you increase their taxes? Oh, well, we want to spend the money. Well, if 9 out of 10 of your industries are doing poorly, why don't you not spend so much, right? But say, wow, we got one economy that's doing really well. Let's tax them and spend it on the other ones that are not doing well. Well, the problem with that is now you have 10 economies not doing well. So anyways, so whatever. Uncertainty is usually going to discount valuation because you have to be compensated for your risk. So Australia either raises interest rates or decreases their price. In this case, the purchasing power of their currency, right? So whatever. So I think we'll leave it at that. It's a quiet day, but I hope you appreciate I didn't take the day off. Banks are closed in the United States. It's it's a holiday in Canada. It's Health and Sports Day in Japan. The markets are going to be quiet, but like I said, I'm always going to be here for you. So thank you for being a client of TradersWay. We appreciate your loyalty. Children's Day in Brazil, huh? Very nice. The children are our future. Treat them well and let them lead the way. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow and the next day and the next day and the next day. Cheers.